So today we're going to look at how to build a portfolio for Canadians. So there are a whole bunch of asset classes when it comes to figuring out investments, and why inverse, leverage, and single stock ETFs aren't in green. Basically, InvestGan's not using these when it's looking through all the ETFs. Fixed income is separated into global bonds and aggregate bonds. Aggregate bonds basically means your bonds are just still staying in Canada. So you can build a two-fund portfolio to beat most financial advisors, XWD and ZAG. XWD is your offense, ZAG is your defense. If you're an 80-20, 80% XWD, 20% ZAG. Investing can be as easy as you want it to be. So if you look closely at this TD fact sheet, they only use 3 benchmarks to build their portfolio. When you look at all the banks, basically they use 5 major asset classes: emerging markets, international, US, Canadian equities, and Canadian bonds. And that's why in 2012, the first version of InvestGan only had 5 investments. Basically, it was mimicking the bank and having a robot build a portfolio. What InvestGan is a target date fund. That's what it's always trying to build you. You have to reduce the risk tolerance as time goes on. And basically why you're using the different ages is it's triangulating the risk tolerance. Someone who's going to live longer has to risk their money longer. The target date strategy has been around forever. It's like some firms call it the glide path. But basically, InvestGan's following the market and always trying to make sure you're in the least risky portfolio to make the most amount of money. So when looking at all the ETFs on the Canadian market, basically InvestGan's dividing it into 10 different asset classes: emerging markets, international, global and US sector. There's also industry ETFs in here. These are a little riskier: American and Canadian. And these are listed from highest to lowest risk. Looking at fixed income, you have foreign bonds, corporate bonds, government bonds, commodities, and money market. Your corporate and government bonds are in Canada, and these are listed from highest to lowest risk. So how do you decide to buy what ETF? I don't know. YouTube's not helping you. Ben Felix isn't giving you tickers. Basically, ETF providers are just launching the newest fund that they think retail investors are going to jump all over. And in Canada, that's covered call ETFs. What can you find on YouTube? Basically only covered call ETFs. As soon as you realize I made all the videos of the covered call ETFs to prove Ben Felix's claims, you'll be better off. But he didn't know what a target date fund was until a couple months ago, so who are you going to listen to? So in these 10 asset classes, there's almost 1,000 ETFs. And when you let a robot help you pick the best one, it's going through over 3 quintillion combinations to help you build the best portfolio. You figure this out by multiplying the number of ETFs in each asset class together. So there's 7 portfolio templates. Basically, they get harder as they go on. Graduate. If you are a very beginner investor, use the very left portfolio. It is so easy to copy. That's all you need to do. And then you start getting into portfolios with dozens of ETFs. Imagine how many combinations that goes through. You cannot humanly do this. And I didn't forget about the ESG investors. You're going to look at the leaf and the tree portfolios. InvestGan, download it.